ladies and gentlemen, next up is Jimmy King with Bankingbridge. Jimmy, whenever you're ready to start.
Thanks, Vic. Bankingbridge is solving a problem in the financial services industry, and we are a web-based platform that quickly connects loan officers and realtors to co-brand in real time across print, digital, and social media. And we sell our service directly to small to medium-sized banks. So over the last 7 years, as we all know, there's been a lot of changes in the mortgage industry. So one of those changes is what we'll call the back-end changes. That's the processing of a loan, that's your underwriting questions, and then trying to get a closing documents out on time. It now takes more people to do the same amount of work as it did 7 years ago. And that's a challenge that we continue to face in the industry today. Well, the other thing that's changed as well is what we can call the front end. These are the interactions that a lender brand has with a customer, how they interact with them now. 10 years ago, those interactions took place in a branch. You'd go in, you'd meet face to face. Now, almost all the interactions are happening online. You have to have an online presence to succeed in the future of the mortgage business. So, because of that, you've created two different types of lenders. You have one type, which is your online lenders. Those are your Quicken Loans, your guaranteed rates, sites like LendingTree. And if you ask the question, well, why are they successful? What are they doing that these other banks are not doing? And that is their ability to advertise. They understand how to advertise. They advertise on TV, they have online ads, they have social media ads, and all of those ads are directed with a frictionless process through a workflow that gets their customers into their sales funnel. They excel at that. That's their strength. So you have that one group, which is your online lenders. Well, who is the other group? Who is the other group of lenders out there that are struggling? And that is your small to medium-sized brick and mortar lenders. The thousands of banks we all drive by every day. That's who's struggling. They need an online presence and they don't know how to get there. They've invested all of their time instead of investing online, they've invested on their loan officers. So if you ask the same question, well, what is the advantage that they have, brick and mortar banks have over the online competition? The one advantage that they have is the relationships that they've built with loan officers and realtors locally. So, and getting more out of those relationships is it directly affects their bottom line. So if they can build those relationships, get more out of them, and it will directly impact their bottom line. So Bankingbridge offers a solution around that. We've built our product around the realtor and loan officer relationship. And our product works very similar to Facebook or LinkedIn. So you're on Facebook, when you accept a friend request, you're sharing information. That information might be pictures, it might be work history, it might be details about your life. And on Bankingbridge, you share real estate agent information and loan officer specific information. So once on our site, you're able to send an invite to a realtor is able to send an invite to a loan officer. Once they hit connect, then information is shared between those two parties. So that's the solution that we offer to small to medium-sized banks. These are an example of the invites and the search feature that is on the site. And if you want to build a real-time, hands-off, co-branding experience, you have to have industry integrations. So we have an integration, two integrations that are key. One is with the largest pricing engine software out there right now. They have 1,600 customers, 1,600 lenders, and that allows us to provide lender-specific, real-time interest rates, loan programs, compliance materials that you need. And the other piece that we have is mortgage insurance companies. So we have integrations with various mortgage insurance companies that allow us to provide real-time interest rates, real-time mortgage insurance quotes to lenders that's lender-specific. So those are the key pieces is being able to deliver a compliant environment that loan officers can work within and begin to co-brand. So when you create a relationship, you create three pieces of material. You've got your print media, So these are created in seconds. The cool thing about our flyers is they are branded to the real estate agent. It gives 4 loan programs. That's it? That's 5? Wow. Sorry. But recapping, we've got, you've got your content management here, and we do, we're giving loan officers and realtors a way to quickly connect, give an online presence, and work in a compliant environment.
Thank you.
Yep.
So as we've heard quite a bit, 5 minutes ain't no cakewalk.
No, it isn't.
Panelists, I want to ask some questions you might not have gotten to.
Yeah, for sure. So, to make sure I understand this correctly, this gives the realtor the opportunity to present lending options to the buyer on site?
That's right. So we sell our service directly to a bank. We bring a bank on board. They bring on their customers. So whoever their existing relationships are, it could be a builder, it could be a real estate office, and we allow them to connect however they want it. If they want us to do it up front, we do it, or if they just want us to use our invites to send out. And then once they have the invite, there's some compliance pieces, an MSA that may be needed to be accepted. But yeah, once that relationship is established, then it's forever. And they share their listing details with the loan programs.
How do you make money?
We sell, we have our first, we're actually in production. So as of April of last year, we have our first, of a month ago, we have our first paying customer. It's roughly about $85,000 a year contract. And they're in, it's 100 loan officers in a 6-state region. So they have roughly 350 realtor connections right now, and it's been probably 3 weeks. And the feedback has been tremendous because this process of co-branding is very difficult. And it's a compliance mess. It can take months. And now we've come to make it seconds, where if it's something as simple as a flyer, they can do that, and it's generated in a second. And it's lender specific and it's compliant. And then the Instagram and the social media shares, we haven't seen anybody do a co-branded share, and the feedback has been great.
Okay, so what is your purpose in this? What are you looking to do?
So we're going to sell why
are you pitching?
Well, we need money.
Okay,
Yeah,
that's good.
we need money. So yes, excuse me. Yeah, we need money. So we're going to our Optimal Blue is the pricing engine that we use. They have a conference in June. They're expecting to have 250, 300 customers. And we hopefully will get a couple more contracts. And you can expect each contract is between 50 and 100 grand. And we need the resources to get us from here to September. To bring, if it takes 60 days to bring those guys on, we need to have some funding to get us through that point.
Okay. So, first and foremost, I think what you're doing is great. I think you're scratching an itch. That's good. It took till you were 2 minutes and 40 seconds into the pitch to get to the problem.
Yep.
You were kind of talking, and so I get it. This is PitchBreakfast, so this is what this is for, right? To work through it. This is a complicated an abstract problem you're solving. It's not something that we all deal with every day. So I get it that you're trying to educate us quickly, but we're a little more sophisticated. Most people, especially most investors, have bought a house and understand that process.
Sure.
So you can probably assume that they understand the mortgage process. We certainly understand Lending Tree and Quicken because we see them all day, every day. And the other side of it was you're basically Quicken Loans and Lending Tree for the rest of them, right? Not the Banks of America and the PennyMacs, but South State Bank and Atlantic Bank and all that. That would have gotten me right up. Okay, cool. You're going down market to get these guys connected, and there's going to be and it helps the real estate agents because you're giving financing options when you're seeing the property. Right?
Correct.
So my biggest thing is to tighten this pitch up really quickly is to get to the big money problem. How much money is wasted here annually? Your solution, which is a 1-paragraph answer of we connect bankers who are not top-tier banks, who have great lending programs, to the real estate agents so they can present them in the moment at the front steps of the house with lending options, thereby getting Lending Tree and Quicken Loans out of the process. That's what we do. And then talk about you and why you're awesome and why your team is awesome, the product that you can show us more of the product, and then ask us for something. What do you want? I'm looking for angel funding. I'm looking for bridge financing. That's why I'm here today.
Gotcha.
So that I can, because I'm struggling to understand what's going on, but I realize you're a very intelligent guy. You guys spent a lot of time working on this and want to help you.
Right.
I just didn't know how.
Sure.
Okay. There it is.
Good, thanks. So just so I understand, the value prop is, when you go to these small banks like South State Bank or whatever it is that you're providing them the service that is branded specifically for them, that otherwise if they wanted to attract these realtors and customers, they would have to develop themselves. So it's a cost avoidance play.
They're working with the existing customers or existing realtors. That's all we're focused on, getting more out of the existing relationships that they already have,
But
quickly.
To get that kind of functionality, they would have to develop it themselves. I'm their co-founder.
Yeah.
Oh, you are. So really, so I think the pitch is really, it's a cost avoidance strategy for these. There's two ways to get money. You can go to Quicken and things like that. That's not our competition. That's a part of the market. But it's really, we're going to help the smaller banks, reach this market in a more effective way, whether it's the print or the media or Facebook, whatever it is. And it's a cost avoidance for them. I think that's the value proposition that you need to talk to investors about. Because people understand cost avoidance better than salespeople. So it's like all these people can, because they're still in the lending business. If I decide to drive by South State and go in at the end of the day, it's not going to be that much different experience for me if I end up getting a loan from them.
Sure.
It should be easy, but I think cost avoidance, and then you're going to talk about the financials and the growth rate. I mean, I think it's great. You guys got an $85,000 contract, so build it up. So I need 5 needs to get break even. It's going to take us 6 months, all the things we've talked about before.
So more numbers, got it.
But I think you got to get to that cost avoidance thing like in the first
Okay.
minute. Tell me really, and the slides, investors are pretty picky and they usually try and find all kinds of reasons to kill a deal. You've got a slide in there where you're using 2 pictures of women that have 2 different names, so I don't know if they have aliases or what the story is, but I would certainly, before I pitch to investors, I would clean that up a little bit. But again, I think, in your initial slide, instead of having the Bankingbridge or the Bankingbridge slide up there, you got to have something to look at because investors expect to see that
Okay.
change.
One thing that Jerry mentioning that you have a paying customer already, that validates you right off the bat. We already have our first customer, we're ready to go. All right, cool.
So if I'm a poor professor, and these are rich investors, we go to the same house, are we not going to get different rates or anything, or is it the same rate for everyone?
Same rates.
Even if we have different credit scores?
The disclaimers on it's whatever the bank wants to set up in compliance. So whatever credit score that they want to use, then that's what rates will display. You get 4 loan programs for each listing. So you'll have 4 options.
Okay, so if I'm a realtor selling Blackstrap Retreat, would I have 3 different banks at the bottom there that I have relationships with?
You could have 3 different lenders in your network, but you can only display one at a time. So you might have a lender that works primarily with jumbo pricing, and they're really good at that, and you want them on specific listings. But you also might have another lender that does a lot with first-time home buyers. So you can build a network based on what kind of properties you're selling.
Okay, and so do you also aid all the closing documents? Because you don't do that.
Nothing of that. We're just doing before the loan process starts. That's what we're doing.
When you're shopping for rates, as a home buyer, when you're shopping for rates, you would encounter Bankingbridge.
Okay, so I would see 3 different rates for the same house.
And it's exactly what this gentleman just said. How do you compete with bank rate if you're a brick and mortar regional bank? I mean, there really is, as more and more people shop online, there really is no way. I mean, the customer that we're working with right now just got a new billboard on I-26. I mean, who's ever gotten a mortgage because they saw a billboard on the highway? Maybe 15 years ago they did, but now they're shopping for rates online against every other bank. And we want to get those regional banks on that plane.
Okay, so I love the idea because my background is actually in property, so I did a PhD in property. A couple things I would say is, number one is, I'd like to know more, obviously you didn't have enough time or anything, but know about the team. So one of you guys is either banking or real estate, presumably. So why that whole idea came out straight away?
Okay.
So I'd really like to do that. And I'd really just emphasize you know, what I'd like to know straight away is, you know, here's a problem and here's our solution, and really get that done straight away
Gotcha.
before we get into all the other stuff. So we were really straight up with it because you gave us a beautiful history, but as Gavin said, that took a little while to get into it. But I mean, obviously there's a problem here, and you know, so exciting times.
Yeah, just one other thing I would say is, when you think about funding needs and scaling, the fact you got a paying customer is really relevant to that. I would say if you had a 10-minute pitch, I would say, so how long did it take to get that customer? What are costs to acquire that customer? What's your sales cycle? Now, arguably, and can you use it as a referral customer? If you had South State and you go to Atlanta, they might go, oh, you're working with South State, that's not good. So you have to be able to think through and fix that.
Have you guys gone to any of these apply for any of the financial technology accelerators?
No.
So you may also want to look at that. There's one of our student groups did one in Little Rock, Arkansas last summer. And they ended up with, they raised a lot of money now out of that. And then they also got $50,000 just for email.
Wow.
So you might want to look at those as well.
Thanks. Appreciate the feedback.
Bankingbridge, ladies and gentlemen. 5 minutes was quick.